Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 1st of July 2021. The time is just 0500 GMT, Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, Wednesday the 30th of the 6th, last trading day we had a negative opposed driver in the yen at minus 150, front and back door flows mainly going into the dollar at plus 103, into the pound at plus 82, and the euro was the negative rock at minus 35, activity plus or minus 185. Intra-week then becoming more relevant, this is from Monday the 28th, open to about 15 minutes ago. We've got a positive opposed driver in the dollar, plus 192, front and back door flows mainly coming out the euro at minus 146, out the pound at minus 120, and the yen is the positive rock at plus 74, activity plus or minus 266. Intraday then, this is the Asian session to about 15 minutes ago, got a negative opposed driver in the pound, minus 37, front and back door flows, mainly going into the yen at plus 33, into the dollar at plus 26, and the euro is a negative rock at minus 22, activity plus or minus 59. Right, so over the week then we've had dollar strength, euro weakness, pound weakness, and a bit of yen strength. Right, what's going to knock it about? Well, Australia's yet more negative sentiment. We've got this virus outbreak in Sydney, which is proving stubborn to control. Today we've got German retail sales, we've got the ECB speech, the Bank of England speech, and the USD manufacturing PMIs. And tomorrow, obviously Friday, we've got the non-farm payrolls. So that's where we are there. What's been happening with the flows? Well, we'll have a look. And our trades, have come back a bit. So we're about plus 2,000 points from a peak of 6,500. So it's really just dirging around again. Right, so let's have a look. Euro. The euro's weak, except against the pound and the AUD, which are weaker. The yen is strong, except against the NZD. The pound is weak, except against the AUD. The Swiss is weak, except against the euro, the pound, and the AUD. The CAD is strong, except against the yen, the dollar, and the NZD. The AUD is weak across the board. The NZD is strong, except against the dollar, and the dollar is strong, except against the yen. So what have we got? We've got a bit of a mixed picture today. We've got Australian AUD weakness. We've got dollar strength minus the yen, and we've got yen strength as well. So we've got yen and dollar strength, standard risk off scenario as we run into NFP Friday. So let's have a look at what's been happening in the asset classes. So let's just get rid of this. Right, so US dollar index. Basically, you're looking at something like this. So it's up near the top. So the dollar's really pumped up at the moment. Gold has had a hard time, as you'd expect, but it's actually come up a little bit. It's 0.43 from the floor. Oil broke, and it's up here. It's about plus 0.45 from the high, so it's 45% higher than the break roughly. Wall Street's had this sort of dirging down look, but it's 0.22 from the high, so Wall Street's lagging a bit. S&P it broke, and it's about 0.25 above the high. Tech, likewise, it broke, and it's plus 0.29 above the high, so it's 29% above the high. So you've got Tech, S&P, Wall Street batting order there. US 10-year. Right, well, the US 10-year is really not happy. It's basically oscillating, and it's stuck at 0.5. So it's half marks. The bond market doesn't know whether it's coming or going, basically. And the bund sort of has got this sort of look to it. It's 0.36 from the high. Remember, these are prices, so the bund price is relatively higher than the US 10-year. So yields in the Europe are relatively lower in model terms than the US. Hence, we've got this pump in the dollar at the moment as well. As part of the reason. Copper. Copper really has been having a hard time, and it's now 0.5. So it's half marks copper. Again, it doesn't know whether it's coming or going. And US steel has been sort of dirging around. It's 0.36 from the floor, so it's 36% bounce off the floor. So it's soft. Right, let's just have a look what's going. I think it's going to happen then. So the themes have basically been dollar strength, hammer the AUD, the pounds come off, yen started to come off, and now it's coming back. So you're getting, where is this flow? So the Asian flows, you've got weak pound, weak euro, strong yen and strong dollar. Right, so we're short USD, euro, pound, AUD, and we're short NZD, euro, pound, CAD, AUD. Now AUD's been very soft, so that's not been happy. Dollar's been very strong, pound's been soft, euro's been soft, NZD's been strong. Likewise, these have been soft, and the CAD has been neutral to up. So our trades, no wonder they've been pretty resilient given the backdrop and the circumstances. What do we think is going to happen? Well, you're looking to start to get this. You're looking to start to see classic risk off, which is yen strength, dollar strength. But the dollar index is right up against its. So you might see it poke its head above the resistance, but not for long. So the yen's likely to stay strong. Equities are likely to go sideways, so neutral, and therefore that will put a cap in the yen. So who's going to be the movers? The AUD is likely to be soft, and the pound is likely to be soft. So it's just what you pair those up with. The AUD is likely to be soft against the yen. So any of these, and the pound is likely to be soft against the yen. So despite us saying yesterday, it did have a little pop yesterday on the up, but we think in the short term the market's running scared all the time at the moment. So it's got no real fundamentals. It's just noise driven. So anyway, hopefully that helps you. See you again tomorrow for the daily briefing. Thank you very much.